think I need to start from exemption from capital gain. Okay. First, section 54, it deals with exemption relating to transfer of capital asset being long-term residential property. Who are all eligible for this exemption? To claim this exemption, individuals and HUF can claim this exemption when they sell their residential house property. It should be long term. If any gain arising from such house property, if the gain is within 2 lakhs, 2 lakh and less, then if you invest in any house property, you will get the exemption to the extent of investment or gain, whichever is less. Example, assume that you have got the long-term capital gain of rupees 1 crore 80 lakhs. If you purchase any house property, if the cost of that purchase is 1 crore 50 lakhs, then you get the exemption 1 crore 50 lakhs. If the cost of house is 2 crores, you will get the exemption of 1 crore 80 lakhs maximum to the extent of gain you earned. This was the provision. Earlier it used to be. I think in the 1 year back or 2 years back, they made the amendment in this provision. Instead of claiming exemption on investment in one house property, if you invest in 2 house properties also, you will get the exemption, provided your gain should not exceed 2 crores. If your gain exceeds 2 crores, you can claim exemption under this section on only one house property. If the gain doesn't exceed 2 crores, then you can claim exemption on 2 house properties, provided the cost of the house property of the both will not exceed 2 crores. If it exceeds 2 crores, it will be restricted to 2 crores. When can we invest? The question arises. The investment in house property can be made before 1 year from the date of transfer, or after 2 years from the date of transfer, you can purchase the house property, or within 3 years from the date of transfer, you can construct the house property. Within that period, if you have made any such investment, you will get the exemption. Okay. See here, amount of exemption it is given. Lower of long-term gain, whatever the gain you get, or amount invested in house property, in the new house property, be it constructed or new purchase of new residential house property, whichever is less, you will get the exemption of the capital gains. Straightforward provision. There is no complexities involved in this. Okay. Normally you will not get any of these things. Hence I am leaving, just you guys go through next 54 EC. Mark this one as important. Capital gain exemption in case of investment made in specified bonds. That means if you have transferred any capital gain, that should be land and building or both. The gain should arise from transfer of land or building or both. To whom it is applicable? It is applicable to any assessee. If you have transferred land or building or both, and you have got the gain. If you invest in the specified securities or bonds within 6 months from the date of transfer, you will get the exemption up to 50 lakhs. What is the amount? Up to 50 lakhs. You will get the exemption. Assume you have got the gain of 60 lakhs. If you have invested the gain in specified bonds means they have given here the bonds, rural electrification bonds, NHAI, Indian Railway Finance Corporation, or Power Finance Corporation. Those bonds, if you invest in that, if the investment is 45 lakhs, you will get the exemption 45 lakhs. If you invest 60 lakhs, you will get exemption of 50 lakhs maximum. Within what time you have to invest? Within 6 months from the date of transfer. Earlier it used to be till the before the due date of filing of return of income, you could have invested. Now they have made the exemption. They made the amendment. Within 6 months from the date of transfer. Assume you have transferred in the month of May. See, always transfer should happen during the previous year 22-23. Entire capital gain to come into force. Okay. May 22, you have transferred the asset. Within 6 months, you need to invest. You will get the question. When you wanted to invest in the bonds, there is no bond available in the market. That means bond was out of stock during that time. The 6 months got expired. In the 7th month, bond were available in the market. You invested in the bond. Still, you will get the exemption. Why? Because your intention was very clear to invest in the bond. Bond was not available. You made an advance. But you haven't got the bond in your name, registered in your name. In that case, still you will get the exemption. Okay, this question you may get. This is 54 EC. It should be long term. The asset should be land or building or both. Who will get the exemption? Any assessee. Any assessee will get the exemption. They haven't mentioned it should be residential. Even if you sell the commercial also, you will get the exemption. The company may sell the commercial building. If they invest in bonds, they will get the exemption. Okay, all these things are MCQs. Old scheme students, you can refer this. Okay. Next, tax incentives for startups. Startup means if any company comes into existence during the previous year, in that case also you will get the exemption by investing in that startup companies. It will be applicable to all assessees. Asset should be any of the assets. You sell the asset and you invest in the startup. Maximum investment is same as 54 EC. Up to 50 lakhs, you can invest in the startup companies. That means you invest in the startup company may purchase some assets. That is horse good. Okay. Normally, you will not get these kind of questions. If at all practical, I don't think you will get. You may get theory to write the provisions relating to Section 54 EE relating to tax incentives for startups. You may ask. This one you will get. This is most happening section 54F. It is applicable only to individual and HUF. If they get any long-term capital asset, transfer of long-term capital asset other than residential property, if they transfer any other capital asset being a long-term, they will get the exemption. The same provisions like 54 on transfer of long-term capital asset, they should invest that amount in the purchase of residential property. They should invest. As in 54, you can invest before 1 year from the date of transfer or after 2 years from the date of transfer. You can purchase the residential property, or within 3 years you can construct the residential property. On the date of investment, you should not own more than one residential house property in your name. That is the key here. How much amount you will get the exemption? The amount of exemption will be net consideration. There is a change in this. In most of the cases, you will get the exemption relating to whatever the gain you earned. But in this section, you have to invest the net consideration. What is meant by net consideration? Net consideration is nothing but sale consideration less expenses on transfer, if any. Whatever you get after this, you will get the exemption. Assume that $99,25,000 is your net consideration. You need to invest this much amount. Okay. If you assume that your cost of acquisition, the index cost is 55 lakhs, you get the gain of 34 lakh 25,000. Assume, and you have invested 80 lakhs. Invested 80 lakhs. Is it 80 lakhs? Is it 80 lakhs? Assume that you have purchased a residential property for rupees 80 lakhs. You will not get exemption of 34 lakh 25,000. It will be restricted proportionate amount. What is that proportionate amount? 34 lakhs 25,000. You got the gain for the consideration of net consideration of 99 lakh 25,000. How much you will get the exemption for? 80,000 is the amount. This divided by 99 lakh, this one multiplied by 80 lakhs. That means 27 lakhs 60,705, you will get the exemption. Balance becomes taxable. 6,64,295 becomes your taxable long-term capital gain. Are you guys understood? In this section, you need to invest net consideration.
Can you explain how this 27,60,000 came? Once again,
This is 34,25,000 is your long-term capital gain, sir. Okay, to get the exemption of this amount, full amount, you need to invest full 99,25,000. But you have invested 80 lakhs in the purchase of new residential house. You will get the proportionate. 34,25,000 is for 99,25,000. How much you will get the exemption for 80 lakhs? That comes to 27 lakhs 60,705.
okay, sir. Thank you.
Okay. Now the question arises: can I claim exemption under two sections? Yes, you can claim exemption under two sections. Under section 54F, this much you are getting assumed. The balance left is 6,64,295. You can invest 6,70,000 in bonds. You will get the exemption. Or under section 54, if you invest in any other residential house, will you get? No. Why? Section 54 says the transfer should be long-term capital asset, being land or building or both. But section 54F, this section says any other asset, long-term asset other than residential. That means if you get exemption under section 54, you will not get exemption under section 54. If you get exemption under section 54, you are not eligible to get exemption under section 54F. Why? Because there it is a long-term asset you should transfer, being land or building or both, residential one. In 54F, any other asset other than long-term capital, long-term residential property, being land or building. Understanding, guys? You need to have the clarity on the who is eligible, what is the asset, and within which period, within what period you need to invest, what is the threshold limit, if it is applicable. If so, how to calculate. Here it is net consideration. Okay, this much if you read from the exemption from capital gain, more than sufficient. Normally, of these three sections, you will get the question. Normally 54, chances of getting more 54 and 54 easy. If 54 is not attracted, 54F, the question may come. I mean to say, they may sell gold, they may sell share, then 54F, you can get the exemption under 54F. When you getting the exemption, when you are claiming the exemption under section 54, you cannot claim exemption under section 54F. When you are claiming exemption under section 54F, you cannot claim exemption under 54. Why? Because of transfer of the asset. If the transfer of the asset is residential house, 54 will attract. Other than residential house, but investment in residential house, 54F will come into picture. Any doubt? I think I did this one, no? Tax on long-term capital gain on specified securities.
Yes, sir.
Actual cost, lower of fair market value or sale consideration as on 31st January 2018. Okay. See, they are given the question also. I think I solved this question, I believe. Have I solved this one? It is pretty. Have I solved or not? This one, pretty straightforward question.
Solved it, sir.
Okay, see, please go through this table, long-term capital gain table. What are all the assets? I think they should have given one more table. They have listed all the assets and the tax rate. These are all called as special tax rate sections. 112A, 10% in excess of 1 lakh, 10% in excess of 1 lakh is taxable. 111A, it is taxable short-term capital gain on listed securities. Under section 111A, taxable at 15%. Any other long-term gain, taxable at 20%. These are all the special rates tax. Normal slab rate in case of individuals and HUF. Okay. Guys, if it is Supreme Court decision, please go through the case. Please go through the case once. Okay, if it is Supreme Court decision, normally